this video, I'm going to go over the top 5 mistakes small business owners make in accounting. And if we're just meeting, I'm Casey, an accountant at a Fortune 200 company. The number one mistake small businesses make is not separating personal and business finances. Now, this might seem basic, but trust me, it's incredibly common. Many small business owners start out by using their personal bank accounts to cover business expenses. It's convenient in the beginning. It can lead to a huge mess during tax season, and it can cause some serious headaches if you're audited. So what's the solution? Open a business-specific checking account. This will make tracking income and expenses much simpler, and it keeps your records cleaner. Plus, having a business account helps establish your business as a separate entity, which is essential if you're looking to build credibility or even secure a loan down the road. Number 2, not keeping receipts and documentation. This one catches so many people off guard. You'd be surprised how many businesses forget to save receipts, especially for small expenses. But when it comes to tax season, every deduction counts, and you'll need proper documentation to claim those expenses. So my proposed solution, use something like QuickBooks or Expensify, and you can take a picture of the receipt and it uploads immediately into the software. You'll thank yourself later when it comes to tax time. Number 3, ignoring cash flow management. Small business owners often focus on revenue and expenses, but they overlook cash flows. You can have a profitable business on paper and still struggle to make payroll if your cash flow isn't consistent. My proposed solution, implement cash flow forecasting. Basically, you look at all your cash inflows and outflows each month and project them over the next quarter and spot any potential cash shortages. This will help you plan ahead so you're not left scrambling for cash when you need it most. Mistake number 4, failing to plan for taxes. A lot of small business owners think they can wait until the end of the year to start worrying about taxes, but that's definitely a risky move. Taxes are one of the largest expenses for small businesses, so it's critical to plan throughout the year. So the proposed solution, set aside a portion of your revenue each month for taxes. You might also want to work with an accountant or use tax software to update quarterly payments. This way, you're not hit with a huge tax bill come April, and you can avoid penalties for underpayment. Number 5, and most important in my opinion, is hiring a professional when needed. Now, I totally get it. Many small businesses are on a tight budget, and they try to do everything themselves to save as much money as possible, which I get it, especially in the beginning. But when it comes to accounting, doing it yourself can cost you more money in the long run if mistakes are made. So what's my proposed solution? Hire a bookkeeper. If you got some easier stuff, for complex issues, consider hiring a CPA, especially when it comes to financial statements, at least to get you started. The peace of mind is worth it, and they often can find you ways to save money through deductions or tax planning and just overall financial knowledge that you may not be aware of. If you want to learn the basics of accounting, consider purchasing my book on Amazon.